Meet The Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
I'm curious by show of hands, how many in the room have used either Uniswap, MakerDAO, Compound, or EtherRisk? All right, that's, I don't know, 75%. That's pretty good. So, I think we talk a lot about fundamental value that blockchains are providing people beyond just providing speculative assets, right? And if you look at kind of the fundamentals in this industry, to me, one of the most important kind of single fundamental metrics that we're starting to see is ETH locked up in smart contracts, right? And last night, I haven't checked today, but last night, the amount of ETH locked up in smart contracts surpassed 600 million, right? And these guys are basically the cause of that. So I think that's pretty cool. But I want to start by hearing a little bit from you guys on how you guys feel about Ethereum as a layer 1 platform, right? I think earlier this morning we talked about some next-gen dApp platforms that are kind of solving some gaps in the market, perhaps from Ethereum. But how is Ethereum suiting your needs right now, would you say? Maybe we could start with Hayden.
Yeah, okay. I think that the primary use case for a smart contract platform is to have decentralized, censorship-resistant, and trustless financial transactions. And in that lens, I think that Ethereum is serving it very, very well. It's transactions, when you trade on Uniswap, it's highly censorship-resistant, highly decentralized. You don't need to trust anything other than a smart contract. And right now, the gas fee for a trade is about 2 to 3 cents. So it seems to be serving it pretty well. I know that there are, various scaling problems that people point to, but I think that those are maybe more future problems and can be solved a lot in layer 2.
So Ethereum right now has a really powerful network effect that's growing very rapidly. All of the new assets are generally issued on Ethereum, and each open finance project that gets built adds value to all of the other projects. And I think it's at a point where the applications are becoming, of a certain critical mass where Ethereum is going to continue to grow and the network effect is going to continue to increase, in spite of how bad the blockchain is. No offense to Ethereum. And so, I think just like we have, 50 years later, people still maintaining COBOL banking applications from the 70s, I think in 50 years we're going to have people being like, oh, I got to hire a Solidity engineer to, interact with these old financial systems from 2020. And, I don't necessarily think there's going to be improvements to Ethereum. I think we're going to kind of be here and it's going to work probably for 50 years because of the network effect.
Yeah, I'm probably just going to echo that. The analogy I like to use is how we still use HTML as our primary web language. No one likes it, but it's not changing.
Yeah, my take is that I think of ETH 1.0 as a Ford Model T. It works. It gets the job done. Yes, it's not perfect. We know it's not going to be the Teslas of tomorrow, right? But it's for what it is, it's amazing how far we get to using the technology that is, of course, will be improved upon, and because it's open source for T, right? Every major problem has to be solved once, and if not Ethereum gets some other job done or improved upon, then someone else will, and only time will tell who will be powering majority of smart contracts in the future.
Actually, I want to add something to that really quick. So it's taken us almost 5 years now to create the multi-collateral DAI smart contracts. Those are all absolutely customized for Ethereum. It's just so far from anyone's mind to think if the layer 1 protocol works, that's just not what you're concerned with because there's so many other things to do to get to the final point.
Okay, I think some people might push back here and say, well, look, we got to 600 million or so locked up in smart contracts, right? And there are kind of, ETH enthusiasts that are really excited about the use case of, seems to be kind of the main use case for DeFi right now, right? But there's not many people that are kind of outside of crypto that are coming in to use DeFi products yet, right? Is what some, and to some degree, I might agree with, right? So, what would you say to that, right? Like, who are your users with Uniswap right now, or Compound, or talk a little bit about that, and how, if at all, you're thinking about kind of getting beyond kind of the crypto power user.
Yeah, I think enthusiasts are always the first wave of adopters in any new technology. And right now, crypto and smart contracts and DeFi is a very new technology. I think that part of the vision for open finance is to enable more people to participate in our financial system. And so while it is a lot of enthusiasts right now, I think for Uniswap at least, Uniswap makes it incredibly easy. It lowers the barrier of entry to market making. So in Uniswap, there's about $15 million locked up in the liquidity pools. And I think about 25% of that is, for example, in the DAI pair, there's about 3 million. And 25% of it comes from accounts that have less than 1% of the total stake. So there's a lot of very tiny users. And in the traditional finance system, whales tend to be rewarded disproportionately for the amount they put in. So they have to put in more, but then they're rewarded disproportionately. In Uniswap, it's pretty much linear. So if you put in 1/1000th of the liquidity, you're collecting 1/1000th of the fees. And it's incredibly easy. You don't need to manage the liquidity yourself. You just lock it up and you let the smart contract automate the rest. So that's what I'm trying to do.
So I believe that right now, you kind of have to be a geek to use this stuff. It's not meant for mass adoption yet. But what's going to change is there's going to be more and more systems built on top of open finance applications that eventually users won't even know that behind the scenes is stuff running on blockchains. I think there's going to be more usability that gets continuously built in that eventually users aren't going to be opening up MetaMask and interacting with a smart contract on a blockchain directly themselves. And I think over time you're going to realize that it's there less.
Yeah, I mean, most people think that the DAI protocol is limited to Ether, and that's a very temporary construct. In a few months, when we release the multi-collateral contracts, we're going to have things like, hopefully residential mortgages coming out of our system. We can, or the protocol can generate DAI against anything that a bank could generate money against. So, I mean, I think that's a big leap for some people to take, but, I mean, we're just a back-end credit facility at the end of the day.
My take on the overall what kind of difference the open finance can bring to the world is that the traditional value chains between the interest-paying, insurance-paying consumer and the capital provider has been traditionally separated by as many as 15 or 20 middlemen. Like in our spaces, there is an agent taking a cut commission sometimes for the life of the policy without doing much work. Then there is an agency taking a cut. Then there is MGA, insurer, insurance broker, reinsurer, retrocessionary broker, retrocessionary. Then there is a hedge fund. Then there is a management team of a hedge fund taking 220. Then there is a pension fund, and then there is a pensioner. By the time this 8% or 10% yield at the source arrives to the pensioner, it becomes like 1.1, right? So by allowing what I would say Uniswap-based model is a pure example where the non-interest type of income is accessible to the enablers of the liquidity directly without intermediaries, where not only 15, there is 0. You get 100% less some gas fees. And that is what the most powerful application that we have in our hands to enable, at one day, I hope we will see billion people that will be able to participate and do what we all have as a community. We all have one shared value, which is we all try to bring majority of the value created by individuals back to the individual, which over the past several hundred years, the capitalism as we know it has been not very incentive compatible game. It really was designed, or at least it excelled at separating the value created by the individual, like a worker in a Starbucks or Burger King, from that individual as much as possible. So the worker gets an hourly rate, right, and works all day, all night, and doesn't even have the time to figure out, okay, how do I deploy my assets and so on. So by allowing the individuals to gain a fair share of value they create and being able to access and exchange that value with each other, exchange risk, participate in markets. It's what's something we are aimed to do, and I'm confident we'll get there.
Yeah, so I think that's something that all four of you share, right? Is this idea of like a user-owned utility, right? I think the reason why like Uniswap has such a passionate kind of group of people that are excited about it is they benefit financially from the use of it, right? Would you agree with that?
I'd say that's part of why people are excited about Uniswap. I can get more into that. I think that like a lot of projects raised, tens to hundreds of millions of dollars off of token sales before they had a proof of concept, just off of a white paper. And then they were like, okay, we raised, $50 million, $100 million. Let's figure out how to use our token in the system, because if not, we're scammers. No offense to any specific projects, just like, I think with Uniswap, I tried to create the purest project I could that didn't add any unnecessary components. And I kind of created a proof of concept before trying to raise absurd amounts of money. And I think that is something that felt refreshing to some people. And I think that people found that exciting.
And for those that aren't familiar, there's a project called Bancor which raised something like 150 million, doing something quite similar, right? But had a token involved, and kind of what Hayden's referencing is the fact that there was no token in Uniswap, right? And it was a pure kind of community-driven project, which was initially funded by the Ethereum Foundation, right?
Yeah, and I guess also just the fact that it's so open source has allowed hundreds of developers to come in and make pull requests and contribute. The front end was open source, the smart contracts. It's all very visible, and so people can feel like they can participate directly, which they can.
So somewhat related here, another I think pushback that some people have about Ethereum, right, is ease of use for developers. Right? Greg, you referenced it's taken 5 years to launch multi-collateral DAI, right? And Solidity and Viper are from what a lot of people say not the easiest programming languages for kind of a non-crypto person. So maybe you can talk about that. I know Uniswap was built with Viper, right?
Yeah.
And I don't think took 5 years. Maybe talk a little bit about.
I built Uniswap mostly by myself. In probably the majority of the contract in about 5 to 6 months. So I don't think. The fact that before working on Uniswap, I was a mechanical engineer. I actually wasn't even a software developer, and I came into the Ethereum ecosystem looking to learn software development. And the first project I worked on was Uniswap, and I created it mostly by myself, and it wasn't that difficult. It took the good idea, which came from some Vitalik blog posts, but I don't think it's as hard as people think. I think that a lot of the issues with projects built on top of Ethereum more come from the people implementing it, or the incentives around the implementation, rather than like the pure difficulty. Now, a system like multi-collateral DAI is a lot bigger and more complex than the 1.0 of Uniswap. So that is not a shot at MakerDAO at all. They've delivered more than most projects in the space. But yeah.
And what's difficult about what we're doing is our COO often compares it to building a battleship, because it's very much about security. Right? Writing the contracts themselves is not that difficult, but then making sure that those contracts cannot be hacked is extremely difficult, because Solidity was written to replicate the experience of a web language, when really you should have been using something much more secure. So it takes a really long time to formally verify all those lines of code. And on top of that, it's like building a battleship while it's already in the middle of the ocean, because we have $500 million locked in our smart contracts. So any sort of mistake would be catastrophic.
Yeah, I was terrified for a while when I first released Uniswap that there would maybe be a hack. Right now there's $15 million in it, and I feel better than I did when there was the first million. But
my take is that we still suffer a great deal about UI UX amount of friction. It's not apparent to many of us how hard it is to get into the even Uniswap, how many steps. Okay, now I need, MetaMask, okay, great. How do I get Ether? Okay, where do I buy it? I go, okay, now KYC, the Coinbase, all right. Go I try to get an account. Okay, finally I got the account. Now I need to buy Ether. Then I need to, okay, how do I transfer it? Finally, MetaMask. Okay, finally, Uniswap. Oh, good, right? So amount of steps it takes from like absolute zero to this outcome is truly astonishing. So there's a concept I really liked. I think it's called like progressive security, is where the user gets started with a hosted wallet, similar user experience. You can log in, whatever, Twitter, Facebook, Google, email, and you're in business right away with some credit supplied. And only when you have some value in there, only then you can make the user solve and start figuring out how do they secure their key, right? When you have $1, why should you bother with them having security be their own bank with a very much big friction? So that is kind of, I think, what we need to apply more, this progressive security, so that we can easily onboard more people. But I think this problem will be solved very, very rapidly by those like Facebooks and so on.
So Robert, maybe you could talk a little bit about your experience kind of building Compound, and particularly from a developer perspective, what's your experience been like?
Yeah, so when we launched Compound, we had no idea what to expect, how the community would interact with it. It was really just an economic experiment. It took us about 9 months to build the very first version, which was an MVP in so many ways, that we just wanted to release upon the world. And upon doing so, we started to see how the markets operated, and it allowed us to actually, with a base layer of data and evidence, build the final design for the protocol. So then we then spent the next 6 months rebuilding it in a follow-on version. And so, one of the things that we were really taken by was all of the lessons we learned only by operating in the wild that we didn't anticipate, leading to a second build. And that's how we approached the development process.
So I want to switch maybe to something that Renaud kind of referenced, which is kind of UX, right? Which UX, the kind of DeFi UX, again, works quite well for people like us that are kind of crypto natives, that are familiar with public key infrastructure and comfortable using MetaMask and already have cryptocurrencies and all these things, right? But I'm curious how you guys think about your products, and from a UX perspective, one answer might be you're not really thinking about this because you're just you've got so much demand and interest from kind of crypto natives, and that's what you're focused on. But if not, what are the the opportunities you see from a UX perspective?
Yeah, I think that UX is incredibly important. It's definitely been a focus for Uniswap. I mean, to some extent, yeah, where we started was pushing crypto UX forward, but there is, for someone outside of crypto, it is still pretty hard. And it's something that we're going to continue to kind of iterate on and experiment with. I think there's different types. So there's UX for an end user who wants to buy tokens. And I think part of that just comes from having lots of liquidity, which is one of the goals. But then part of it also comes from maybe bringing some new types of wallet UX. And I think that a lot of that experimentation should be done on the wallet level as opposed to on the protocol level. And then for market makers, maybe that's a little bit different. But I think for market making, it already is a huge leap forward in UX. You just throw some tokens in and ignore it.
So are most Uniswap users right now using MetaMask on desktop? How much is desktop versus mobile?
Yeah.
Yeah.
It's about 50-50 between desktop and mobile wallets. It works pretty well on both. We did build with a mobile-first design in mind. Some dApps, you go to it from a mobile wallet, and they're just impossible to see. So we do think that mobile is pretty important. You also want some sort of basic things if you don't have a mobile wallet, at least fall back to Infura so you can see what's going on and only lock out the transaction signing part or the account balance part. Kind of make it not feel like, you go to the website and all you see is a big pop-up that says, you don't have MetaMask, you can't see anything. I don't know. I think there's a lot of UX work to be done still, and it's something that, we're going to keep doing.
So the biggest advantage of DeFi versus traditional finance applications is that they're open and that anyone in the community can improve upon the user experience for the benefit of everybody else. If you want to improve JP Morgan Chase's user experience, good luck. But if you want to extend and improve upon the user experience of these products, you are able to at 3 in the morning anywhere in the world. you can build new use cases, new interfaces, new applications. And it's the biggest advantage that DeFi has over the existing financial applications.
Yeah, I'm kind of wishing I sat there because he's just saying everything I was going to say. But you know, we have a huge community at Maker, and they have built probably our best front ends. We have an amazing UX team, and they've done an incredible job of what they've been given to work with. But over the long run, we are back-end infrastructure, and we need other people to create those distribution channels and front ends to our technology.
In case of Ethereum, our users are really developers, product builders who want to build their own products. So we get inspiration from guys like, for example, 0x that have launched, that they have what they call launch kit, right? So when you open it up, it says launch your own relayer in 5 minutes, right? So just think about it. 15-year-old somewhere, wherever, can launch an exchange in 5 minutes. And that is an example of another type of user experience, right, that we need to improve, which is the developer experience, how fast and how easy it is, and the quality of these templates and building blocks that allow us to iterate upon many times over every month so that collectively we can build the open finance as it should be.
All right, we've got about 7 minutes left. David, if there's anyone in the audience that has questions, we do want to open this up and have more people to participate. So, but before that, yeah, I want to give you guys a chance to talk a little bit about like roadmap and what you're most excited about for the next 6 months, right? Like I know you guys at Uniswap seem to continue to ship interesting ideas. I personally bought some Unisocks last week, and I'm pretty excited about those. But I'm curious what cool stuff you're working on.
Yeah, so there's a number of things we're working on. Very recently, so Uniswap, I had built it all off a grant, and we very recently raised money from Paradigm, and I hired my first 2 employees starting this month. And so, we're going to start by kind of improving the experience of building on top of Uniswap. So we're going to be working on an SDK. We're going to be working on a widget that lets you implant Uniswap anywhere, kind of a little bit like 0x Instant. We're also, going to work on kind of improving the analytics around providing liquidity and making it sort of easier to, predict how much you will or won't make as a liquidity provider. We did also, last week, or maybe even this week, launch Unisocks.exchange, which lets you a dynamically priced sock. So, every sock, it's a liquidity pool where you put 500 sock tokens, some ETH in it, and every time you buy a sock, it increases the price of the next one. But you could always sell it back into the market. And when you burn it, we'll mail you a sock anywhere in the world.
So when am I going to get my socks?
We're still working on fulfillment and manufacturing, but we do have a design. We are working on that. But the price of international shipping is built in. You don't need to use a credit card or KYC or anything.
Cool.
So at Compound, we create interest rate markets for Ethereum assets. The most immediate thing that we're going to be doing is increasing the number of assets that our protocol supports. We're going to be shortly launching version 2 of Compound in the next couple weeks, and it has built-in support for an almost unlimited amount of assets. And it's going to, hopefully expand what you can do on Ethereum in a lot of ways.
By the way, Robert, what's the interest rate on DAI right now?
It's probably like 8.9%.
It's higher.
It might be higher, but it's set by market forces. So there's a lot that goes into the demand for a stablecoin, and I do think that stablecoins are very popular amongst users to interact with in a lot of ways. Especially from a global audience, being able to manipulate U.S. dollars, borrow them, lend them, spend them is really exciting. And so we're focused on expanding the number of assets that we support and then helping to build Compound into other applications, working with the community, working with other developers, and really multiplying the number of interfaces and tools.
Yeah, I'm excited about 3 things. One is obviously the launch of multi-collateral DAI, but I think it's important to appreciate what this actually represents. I mean, we are going to be able to create money at a structural advantage. People can generate DAI and pay a lower rate than they can anywhere else because there is no depository base. And the fact that you'll be able to do this on any asset is actually pretty important. The other thing is with the launch of multi-collateral DAI, we will have the DAI savings rate. And the DAI savings rate turns DAI into a much more compelling product for everybody because it lets the maker holders pass DAI from the borrowers to the holders of DAI. So you could earn more DAI just for holding it implicitly. And then finally, I'm really excited about how all of these protocols are going to work together. Because I personally have all my DAI in Compound, earning a ridiculous interest rate. The stock market doesn't return that much. And like, if you think about if you could tokenize liquidity provider shares in Uniswap and then put them in a CDP and generate DAI against those, then you've effectively replicated the leveraged market maker relationship that we have in the financial world right now with absolutely no intermediaries, which that's like that's a 0 to 1 situation.
At Etherisk, we're in the risk transfer, and out of 74 or whatever trillion of GDP in the world, 10% are premium insurance. So we are kind of following the applications and smoothing out, creating safety nets. So the teams that are building on top of Etherisk, generic insurance framework, these are the teams that we are helping create risk pools for things like crypto native insurance for crypto-backed lending, risk transfer for like hurricane insurance. Hurricane Guard is on target to launch this year in Puerto Rico. We hope that upcoming CDP insurance for users of CDPs that protect the interest and allow to transfer some of the risks native to the maker ecosystem and overall like man-in-the-middle attacks and so on. This will hopefully get to create safety nets that will signal the average consumer on the street. And because it's very obvious, people will be asking questions. The product like DAI savings rate will enable like high yield deposit accounts, right? But people will be asking, where's the catch? Right, so adding safety nets that's our job, and I'm helping a number of teams to build their product on this generic insurance framework that is non-rate seeking. Anyone can use it to build a risk pool that on one end allows people to pay the premium, on another end to stake and deposit ETH, DAI, and be the reinsurer and access the yields on correlated asset class that does not correlate to ETH or S&P. So this is what I'm excited about, but to finalize, I think the DeFi has a lot of, it's kind of the year of DeFi hype, but I think we should be realistic. I think like when in stagnating mode because of the monthly growth of users, like as far as metrics. Amount of Ether at stake is great, but the monthly growth of users has not been that great at all. We have very high concentration of most usage to come from very few actually individuals, like 10 dozens of people, right? We have very high volatility spikes in, for example, in lending. One day, let's say if you take like things like Dharma, there is 900x difference on a good day origination and a bad day, like $1,000 and $900,000 on bad and good days. So all of that we need to solve with issues like we need to add KYC to all of the protocols so that institutional money can access Uniswap pool tokens, for example. Right now they can't. We need to have auctions to liquidate. And finally, I hope, Greg, please, is there a possibility to make the stability fee stable again? So
All right. So we want to open up for one question. Does anyone have a question?
Quite a small amount. Putting on any amount of money beyond a small amount does make me nervous. Like, so I used Ledger for it, and then we had this U2F transport error, and suddenly I wasn't able to repay the loan in DAI. I wasn't able to access Compound because Chrome decided to blow up U2F. And then, I had to root around through Reddit and Twitter and the blogs to resolve this error by using another browser, and I did all sorts of things, and then I finally was able to unlock it. So it does feel that there are a lot of interdependencies with hardware wallets, because it's the only way to securely access these things. With browsers, there are so many things that sort of can go wrong, and I think this is sort of a weakness that I hope we can overcome.
I agree. I think that, for example, we're working on our account flow, and we're going to support Ledger and Trezor and Wallet Connect and all injected Web3 browsers. I think that I agree that it can feel a little bit janky. I think that the more usage they get, the longer they've been around for, the more smooth and trustworthy they'll feel. Remember that, all these projects are pretty early on, even the ones that have been around for a few years. I think it'll continue to improve. That's my hope, at least, and my plan.
follow up on that. I think the core issue is that we have a very incomplete distribution channel right now, where we haven't had legacy front-end infrastructure pick up our technology yet, which is what we're working on very actively. But I compare it to like if you had to go to a coffee farm and pick the beans and then dry them and then make your own cup of coffee. Like Starbucks will come, but we're not getting 14% interest rates on compound because it's easy.